Hello and happy Wednesday or whatever day in the week it is when you watch this video. Welcome to the channel Lapping Analytics, or welcome back if you've been here before. Today I am going to do a video on the topic of dividends, and specifically the question today is ex-dividend. Should you buy before or after? The reason why I decided to make this video is because I've seen quite a bit of advice online saying that, well, you should actually buy stocks before they go ex-dividend because while the stock will open relatively higher after the ex-dividend moment, or well, effectively speaking, you will make more gains if you buy just before the ex-dividend moment. And sometimes a good way to assess this kind of comments is just to look at historical data. So what I've done, just as a starter, is I've taken, I'm going to start with a case study and then actually present a larger sample of ex-dividend moments and see how the stock behaved. So the reason why I'm starting with OCI Global, which is a company that is listed on the Amsterdam Stock Exchange in the mid-cap index, is because OCI Global, which is a company in the basic material space, especially then in particular the specialty chemicals industry, had an ex-dividend moment last week, and on the 28th of October. But depending on what choice shareholders made, it would actually the money would actually be made available through capital returns or through a regular dividend. But in any case, there was an ex-dividend moment with a total of 14 euro and 50 cents, which was quite a bit of money given the share price of OCI. A reason why OCI did this ex-dividend moment is, well, they've sold a few parts, and that has generated quite a bit of money, and part of that has gone to the shareholders. So what happened is on the 25th of October, so a week and a half ago, almost 2 weeks ago, the closing price of the OCI.AS was 25 euros and 88 cents. As I said, there was an ex-dividend of 14 euro 50, so we would have expected the stock to open the next day if nothing changed at 25.88 minus 14.50, so that would have been 11.38, right? So basically the adjusted closing price, if you will, once you account for this dividend, would have been 11.38. Now there was quite a bit of there were quite some arguments online, at least in the context of the Dutch stock market, that, well, yeah, you should buy OCI before it goes ex-dividend because for sure it is going to open higher. Well, different kinds of reasons were mentioned to support that expectation that for sure or almost for sure it was going to open higher. And actually, it didn't open higher. It opened lower. It was at 11.20 at the opening price on the 28th of October, which it actually was lower than what was left after the ex-dividend calculation. And actually, when you look at the trajectory of OCI in the 7 days from that ex-dividend moment, today's price action isn't in here yet. This is until yesterday's close, so it's the first 7 trading days after that ex-dividend moment. You see here the green dots are the highest prices observed on a trading day. The blue points and also the line is the daily close. The red points are the lowest points of the day, and the gray points are the opening prices of the day. So you have a total of 7 trading days times a total of, in this case, 4 measurement points, and only 2 of those measurement points, just in the first 2 days, they were actually somewhat higher than the what one would expect based on the ex-dividend. So they were above the 1138, and actually the vertical axis in this chart shows the percentage higher relative to that 1138. So you see basically almost the full period in these 7 days, the stock has been moving lower than the 1138, and actually as we speak today in the 6th of November, Although the stock was in the green most of the day, the stock prices have been going down. And well, actually, currently it is somewhere trading around yesterday's close, so the blue point on the right. So you see, in this case, there was a big dividend. People expected, well, yeah, it will open higher for all kinds of reasons. So you should buy before. Well, in this case, it would not have been a good move because if you bought just before that ex-dividend moment, let's say, around the close on the 25th of October, you would be about 3.5% lower today, right? Well, okay, of course, this is just a case study, so I decided to also have a look at other dividend movements, so actually including OCI. So I took OCI in a broader sample of 55 ex-dividend movements in this trading year 2024, all the way until the 28th of October, including that date. So I found 55 different Amsterdam listed small, mid, and large cap stocks that had, and I took for each of them the last dividend moment from the year 2024. So that gives a sample of 55 ex-dividend moments with different sizes of dividend. Of course, I mean the example of OCI was it's kind of huge. I mean it's not normal that a company does an ex-dividend of over 50% of the share price. That is really that's very rare. Usually it's just a few percent, or 1%, 2%, 4%, or sometimes a bit less, bit more. But there is fluctuation, variation in the amount of dividend. And what I wanted to see is, okay, in how many percent of these 55 cases did we find a higher opening price for the stock than what one would expect, accounting for dividend. And then also I decided to have a look at the percentage of cases in which the trading day following that ex-dividend moment, not, apart from having a higher open, had a higher close, right? Because to see, I mean, what happens in that trading day that the ex-dividend has taken place. Will it go higher? Will it go lower? Again, according to the narrative that, well, yes, dividend usually is good and it will open higher, it will have a higher trajectory. Well, in that case, you should get good percentages of higher open and probably also higher close. Now, what I find for this sample of 55 dividend moments is that, well, indeed, in 73% of the cases, the stock opened higher than what one would expect, given the adjusted, the dividend adjusted open, right, or the dividend adjusted close to the previous day. So you could say that in 73% of the cases, the open of that day when the ex-dividend takes place is higher than the dividend adjusted close of the previous day. So 73%, which still means that in just over a quarter of the cases, it doesn't open higher. And well, we just saw that OCI is among that 27% of stocks that, well, showed a lower open, right? And this 73% is actually based on the assumption that you will never have to pay any taxes on that dividend. Now, it is true that if, for instance, in the case of OCI, you chose for capital returns, then you don't pay a dividend tax immediately. It's not that, for instance, if you have shares via your bank, that the bank automatically withholds a percentage of dividend tax. But look, of course, in the end, it is gains that you make through investments. So at some point, you will have to pay taxes over them. But okay, so no, accounting for no taxes for a moment, that is 73%. Now, if you account for dividend tax, which in well several countries is, for instance, about 15%. For instance, well, if you have stocks in the Netherlands with a Dutch bank, then usually if there is a dividend, if it's a regular dividend, then the bank withholds 15% dividend tax. Then again, addressing the question, how many percentage of cases do you actually have a favorable open, so still have an increase? It's only 44%. So in less than half of the cases, after accounting for the dividend tax, do you have an opening price which is favorable given the dividend that the ex-dividend that just took place? Now, when we look at the question, how many percentage of the cases do we find a higher close following in that trading day following the ex-dividend moment? Well, then we see that assuming no taxes, it is 47%. And if we take into account a 15% dividend tax, it is only 35%, which means that only in just over a third of the cases you will have a closing price at the end of that day following the ex-dividend that is actually favorable, which means that you don't lose money effectively or don't lose value, taking into account all of the possible taxes. So of course these numbers are much less favorable than what one would expect. Yeah, sure, buy before the dividend because it will go higher, it will open higher and it will go higher. So, again, to the opening question, ex-dividend, buy before or after? Well, conclusion is buying just before the ex-dividend moment is perhaps not the most advantageous thing to do. Sometimes it can work out well, but as we see, also in quite a few cases, it doesn't work out well. Of course, you can repeat this exercise for your own stock market wherever you invest. You will probably find fairly similar findings because in the past I've done this for some other, at least European stock markets as well. But I thought I should share this because, in the markets, there is, uncertainty is key in the markets. And so if you hear people say like, yeah, well, buy it before or do this, do that, because this will go higher, here you will make gains. It is important to do your own research. Because of course now I've addressed this question of ex-dividend from a purely statistical perspective. But of course, you could also, I mean, before making a decision on a specific stock, whether you're first of all whether you're going to buy it, and then also when you're going to buy it, of course, you should also always do your own homework because, I mean, you should look at fundamentals of the company that is behind that stock, because there may be many reasons why the stock price may go up or go down in a certain period. But I thought I should share this because it's not so clear cut that if you buy a stock just before it goes ex-dividend, that you will necessarily make gains. It's no investment advice. The key message of this video is before you make a decision on buying or not buying, don't just listen to what other people say, even if they are very convinced that something will go up or go down. Do your own homework. Okay, that's it. Ready for this video. If you have any questions or suggestions, just leave a comment below the video or use the email address which I share in the description below this video. Thank you for watching, thank you for listening, and see you next time.